Hello, hello, and welcome to the podcast that we started just recently about a business that is not well known in the world. And you're going to hear how interesting the question that will come up during this conversation. And we're going to have this podcast hopefully once a week. And you feel free to subscribe to ask questions there. So right now we have Lydia, Jennifer, and Hernando with us. And Hernando had a question. Maybe he can rephrase the question that you have, Hernando.
Definitely. An opportunity has come up um, in the country of Panama. There is a um, group who is going or in the process of building a new port in Panama. Has nothing to do with the canal. It's just a port. It's going to be on the Atlantic side or the Caribbean, I should say. That being said, because of the geopolitical situation with the U.S., Panama, and China right now, they ran into a stumbling block because of the fact that majority of the investment or the products of the port or the infrastructure was going to come from China. So that being said, if it is to be Chinese, it's a no-go. If it is from somewhere else, it may be a possibility for them to finally get their license. That being said, and you know, now that I have the license and all this stuff, I thought, well, how wonderful could it be? We're talking about a port. This is not, there's a lot of things that are needed at the port. Forklifts, cranes,
Yeah.
trucks.
So
I
now
mean,
they have to import the goods from other countries.
yes.
Yeah, but it's
So
interesting that, yeah, you're right. Sometimes the products in other countries might be cheaper, but in most of the business, it's more important the cash flow rather than the price of the product, because that's the,
correct.
the
And,
parameter
and,
of performance of each company. So, and
and because it's
that's
such,
where we come from. We started offering those financing.
and because it comes at such a high ticket price, this is millions of dollars. Um, I guess my question is, how can we present a solution, one, for the group in Panama as to how they can overcome the hurdle of the geopolitical situation? But now we have to talk about vendors here in the U.S., truck manufacturers, forklifts, cranes. Yeah, I mean, I'm going to have to go through the whole inventory of what they have in mind to see if there's even people that make that here, because we're not producing as we used to in the past. So, is there a way? I mean, let's say we identify what is needed for the infrastructure, right? Then you go to all these people, these vendors. You could offer them insurance, you could offer them Exim Bank, but is there flexibility enough where I can say we can create a company that is going to buy from all these vendors for the purpose of selling it to the project in Panama and be able to use Exim Bank credit lines for that specific purpose?
We have to make it simple. First of all, the company in Panama who's buying, are they going to be the end user, or they are going to be the
Well, they would be
they're
the
going
end
to
user
resell
because
it?
they're going to
They're
be
going to
using,
resell it, or they're
no,
going to be the end user?
they're going to be the end user because that is
They're
the
going to be
port
the end
facility.
user. They're going to be the
Yeah.
end user. For that, it's a very simple program. They call medium term. Yes, now we're in the process of closing right now in Panama. The largest crane that exists in Latin America, except Mexico, is this crane that we just approved. Is the crane that is brought the tunnel ridge to make the hole for the metro that's going to go under Panama Canal. We just financed it. I just sent the invoice for the closing to the client. So that's the medium term. It's very simple. They are in the industry of trucking. So I try not to find the vendor for them, because if something goes wrong, then what's going to happen? They're going to blame you because you refer that company. Let them find the vendor. We can send it to the commercial service and the U.S. Embassy. They can help them out. If we know somebody, a company from U.S. that already used in the past Exim Bank, then I feel okay to refer that company because we already have the experience so far. Yes, I would do that, but I always rather for them to choose their supplier. That's going to be the medium term. The medium term is very simple. The first thing we ask is for the financial statement, last 3 years. We're going to analyze it. We're going to charge them anything, and we're going to tell them how much do they qualify. And if they do, then we start the processing of the transaction. And once
So
the
medium
transaction
term, as long as all the purchases are U.S. product,
and
we're
US
good.
made, yes. The amount that we finance is 85% of the invoice or the
Okay.
project. And we do have a option that is the product have to be installed, whatever cost related to the product, and the labor is from Panama, we can also finance up to 30%. That would not be the case on a truck. We used to mention that. So trucks, they don't need to be assembled. So they're already done. And then the shipping can be also financed. The crane that we have and that we just finance, we had that when we need to get involved with the transaction. The crane we had just financed, to move the crane cost $1 million. There were 80 trucks involved on the movement of the crane. It's that big. What happened is this: if the company from Panama contact a U.S. company and the contract for the moving the merchandise of U.S. company and the product is with the U.S. company, the contract, then we'll be able to finance it. If they contact a company in Panama and the Panamanian company contact a company in U.S., then we will not be able to finance it. That's it. One recommendation, you want to keep it clear to the client. You have to deal directly with the U.S. company who's going to do the movement. So in order for us to include the shipping costs into the transaction.
Well, I'm sure that most manufacturers, and this is getting into the bigger stuff, ship cranes, container cranes. If they're made here in the U.S., I don't know, but if that were to be the case, those, I'm sure the manufacturer
there is a lot of brands that are made in the United States. That's something that I hear all the time. The fact that someone doesn't know it doesn't mean it doesn't exist. I hear all the time, oh, the U.S. doesn't produce anymore. No, absolutely. We produce every single equipment that you can imagine. Crane, truck, forklift, all that, different brands. They're there. I just came to assist in Georgia, Atlanta. This is an expo that is about only chicken and production of either the chicken, the eggs, or the hog. I mean, there's so many made in the United States. There's so many, everything you can imagine. So there is. And most of the time, the Department of Commerce is the one who can help us to identify where they are. So people that tell me, yeah, they don't know that we produce cotton. They don't know we produce large amount of cotton oil. We produce, I just came back from Texas, and the cotton field, they're huge, they're so big. And they don't, the labor, there's not people labor like in Latin America. They're huge machine who collect all the cotton. So what happened is that most of the production in the United States, they already sold in advance because the quality we have. And you have to go to a reseller in those cases. So we do produce a lot. So take that out of the mind of the people thinking that way. And because it's there. And like I said, I know different companies that already use Eczema, the system. financing for that company. Let's say we give them, I know it's going to be millions of dollars, but let's say $1 million. The charge is going to be the commercial rate in US, which is about 6%, 6.25% per yearly. And we're going to be an exposure fee. That's the risk. The exposure fee, when you annualize it, is most of the Latin American countries, is going to be about 1% more or less. So really now your rate is like a 7.25%. Really, when you add all the
cheaper than any financing in South America.
And the payment is going to be every 6 months. So really, the first payment is in 6 months immediately. So they don't have to do monthly payment. And we normally will finance anything above $350,000. It's going to be a 5 years financing. And if it's more than $5 or $7 million, we can go 10 years, 12 years. So we can, and also the government of the United States is willing to compete if they have another offer for another entity, another government. We will be competing whatever terms they're going to get.
Luis, is there any issues if let's say the manufacturers are American companies? However, a lot of American companies have sent out their manufacturing outside of the country. If it's made somewhere else, is that a problem?
Yeah, it has to be made in the United States.
It has to be made here. Okay.
Yeah, but at the same time, Toyota produced pickup truck here. Airbus has a factory here too. So it's all a trade back and forth. But the beautiful is that now we're going to see more product made in the United States.
And Luis, if I could,
and that's the opportunity of our business. It's going to be a golden years for us because more U.S. product. Yes, go ahead. Yes, Donald. How are you?
How you doing? Hello, everyone. How you doing? I wanted to ask you about, because I know lots of times, we think in terms of manufacturing and big equipment and heavy equipment. So could you help me understand too on the service side, or like maybe software services, a company that's in the US and they provide more services? How does that, is it tied in the same way with providing credit to companies who provide services?
Yes, you have two options. Remember, our insurance or guarantee can be placed into the lender, or it can be placed into the exporter, or when the policy insurance is private, it goes into the seller. So we have those options. Now, the software or the cloud, it will be depend who we're going to finance. Do we going to finance the seller? Do we going to finance the buyer? We can do it both ways. So we do have a company who sells service like that, software. Because there is no invoice, because correct myself, because there is no product exchange to the from seller to buyer, we use the contract. So we have to read the contract, make sure that it's acceptable, and the contract and the invoice will go together so we can do the disbursement. And some of the services that they're gray, not black and white, then it might complicate the transaction. But when it comes to a software, no, because it's clear. When it comes to a logistic transportation, a logistic company, it's a service, also will be fine. Somebody sell a cloud is fine. But it's somebody that it says, okay, I want to give an advice, a consulting, that's going to be kind of a gray, so that might not work. So that's, yeah, but that's the way the service goes. We do have a company who sells services in our portfolio. I know that one of the services that he sells is cloud.
Sells cloud?
Yeah, they sell cloud, yeah.
Okay.
And one of the services, and also they do other services too. Yeah,
okay.
But
that's good to know.
Software technology, yes.
Yeah, that's good to know because it kind of broadens my horizon a little bit, in terms of, not just thinking from equipment to manufacturing, but also keeping my options to know that there are other companies that provide services that we could help, here in the US, because we know also technology is such a huge part of growth right now in some large contracts, are involved.
It has to be US passport.
Okay.
personnel, U.S. passport personnel. There's one in Indiana that's coming up that I met that guy in a. This is interesting. I met him in a family. You know, we know what is a family office, right?
Yes.
I met him in a family office event, and the guy is looking for get investors so they can invest in his company. And
Mm-hmm.
it's interesting that we share the Uber to the airport, and then he asked me, "What do I do?" I mean, so I said, "Look, um, instead of you finding investor, you you do the sale, I will reimburse the money to you, and that could be for export, import. I mean, for export or within the United States." And that's when he become interested into that, because now
Mm.
they don't have to look for so many investors in this company, because he
Mm.
already because services most of the time they're not buying anything, they're
Mm.
just producing the service,
Mm.
so they don't need like a pure financing, so make it easier for them. So the guy was interested and he sent me an email, yes, like a couple of days ago.
And and
I
and
don't
in
know what he
terms,
sells. I don't know what he sells.
right, right. But in terms of two companies, of course, there's no there's we can't help companies that are startups because they have to have at least 3 years of financing, you know. But if they're new companies, like saying new within, younger than 5 years, but they have some contracts in place and they're looking for financing, we can
That's
help them.
that's that's for the government side for the XM, yes. But also remember we have a private insurance.
Mm.
Private insurance, you don't have to have the experience, but that's only the insurance to
Ah,
mitigate the non-payment risk of the buyer. That's only the insurance.
ah,
Challenge will become when we go to the financing company. That's the
mm,
challenge. But hey,
mm,
but you can start with the insurance only. I mean, start just because how are you going to grow? Because let's say you provide a service, you're not buying
mm-hmm,
anything, right? Since you're
mm-hmm,
not buying anything, you don't really need the money. What you need is maybe you do need some money, but not like to buy something and resell it. Maybe
right.
they can lease it, you can pay monthly, whatever you're going to produce in your service, they're going to give them. Not the reason you don't grow is because you don't want to do the service and then they don't pay you. So
Mm,
this insurance is going to mitigate that risk. So now
got you.
feel comfortable. Hey, I can, as long that is the buyer is approved, I can give my service, my contract, and if they don't pay me, I'm going to give my 90% of the invoice. Now
Right.
you're growing.
Yes.
Now, after you do a few sales and you do like maybe in 6 months, then it's time for you to start going into the financing part. Yeah.
Right.
So that's, but
But so
that's
now
the
with the
insurance
insurance,
covers that.
but with the insurance though,
Insurance.
they have to put up a certain amount for the insurance up front, right?
Yes. The lowest insurance price, I don't see it anymore. It used to be when COVID, uh, the, the lowest is about $12,000. You can pay
Mm,
it for installment. Now,
mm,
most of them, you see them at $15,000. That's about
mm,
the lowest. But you pay it on a quarterly, and that will cover you. The highest that I've seen that we're able to give for that amount, for that $15,000, is about $8 million per year. Let's say it's only 6 million. You divide 6 million coverage and $15,000. There's cents per hundred
yeah,
dollars. Really, it's
yeah,
very expensive.
yeah, yeah,
And
yeah.
yeah, so if somebody selling $500,000 a year and the margin is not enough, maybe the policy is not for them.
But that's and the reason why I say that though, because that even if they had to put 15 or 20,000 up front, that's nothing for companies like a SaaS company that's software as a service. These guys, that's nothing for them. That's a drop in the bucket. You
Yeah,
know.
it is. It is. It is. That's the way it is. Yes. Yeah, I agree.
Yeah.
But that's the way that I start. Otherwise, how do they going to provide the service if they don't know
Mm,
if they're going to pay them back? And that
mm, got
opens the door that you can sell more.
I got you. So
Because
that answers my questions. Yeah. Thank you.
yeah, because yeah, in that case we need a contract. and we need obviously the invoice. With the private insurance, you don't really need that contract and the invoice, only when it comes to the claim.
Mm.
Yeah, when somebody didn't pay you. Yeah.
Okay. Thank you.
So that's anybody can bring up another subject, so we can bring the value to the people that are listening right now.
Yeah, I want to ask you a question regarding this deal for Panama. Can he also, they can lease a crane or only buying?
Normally, when we do lease, it's because the transaction is in the hundreds of millions. Because it doesn't make any sense. The reason the clients are going to ask you for a lease is because they don't know that financing exists. Normally, leasing is always going to be more expensive than
Buying.
buying it. Of course, it's going to be than financing. And keep in mind, when you leasing, the goods or the product is not in your name, so you cannot depreciate. So you're losing some money there. So
That's
there's some of that, but normally they don't, because, and the reason they do leasing is because it's easy to recover the goods if you don't pay, because it's belong to the lessor, not to the buyer. But in our case, it's cheaper to buy it. Yeah. So, and besides, leasing is never yours. Sometimes they offer you like a $1 buyback, but we do leasing like for example, airplanes, the Boeing
airplanes.
737 or something like that. Yeah, because it has a residual value at the end, and the amount of the down payment will be huge. So we'll be able to finance the leasing. But on that, the Panama, I mean, if it's under 10 million, would not make sense to do leasing. Yeah.
It is under 10 million.
Yeah, I know it could be 20 million, whatever it is, but also it's a line of credit. They pay for whatever they use. Yeah.
Thank you.
All right, so let's close it up here, but we're gonna stay talking between each other, and I think Carla is here, so then we're gonna talk about something that she has to bring up. For now, this is the end. Keep tuning for this podcast, and let's see if we can bring value to you in the future. Talk to you later. Bye-bye.
Bye-bye.